Hey everyone, hope you guys are all having a wonderful day out there today. Sorry I haven't been able to make as many videos. I have an ear infection going on right now, so I have like very muffled sound and it's all poofy and swollen over here, so sorry about that. I wanted to give you guys a technical breakdown of what's happening with Bitcoin right now post Fed announcement. We all know it's been pretty dramatic. The stock market's been kind of all over the place. Bitcoin's definitely been more down than all over the place. But I think the big casualty of all of this has really just been altcoins. So we're going to break down Bitcoin first and then see what's happening with a bunch of other stuff, right? If you guys are looking for any new exchanges, I got some links down below. And if you guys, use my link, you guys get some bonuses for that as well. So let's get started here. First of all, we already know that Bitcoin is still having that trouble with the 104,130 level. In reality, if we did have what you might call a dovish rate cut with, this rate cut that we had, plus a signal that we were going to have more rate cuts in 2025, I believe Bitcoin would have blasted off and continued to go higher. Unfortunately for us, the Fed believes that the inflation levels are still too high, and their main job right now is to keep those levels down while slowing down the labor market even further. They want to slow down the economy even further. Depending on how you see this is either good news for you or bad news for you. For a lot of us in cryptocurrency markets, of course, this is not good news for us. And you guys can see this right here. We have the stochastic about to break down for the first time in a while. The last time we had a breakdown was all the way back over here, June 17th of 2024. Back over here, the RSI looks like it's about to break down again. We haven't had that happen since April of 2024. And of course, I didn't really see Bitcoin crash and burn. It was more like a prolonged period of nothing happening, which of course was great for dollar cost averaging, but during this time, altcoins were just going down more and more and more. However, MACD still remains okay. I'm not going to get too bearish on Bitcoin until I see that MACD actually go into red territory. So I'm hopeful that because Bitcoin has still been, for the most part, still bullish, right? Ever since we broke it above the $72,000 mark, Bitcoin's been getting higher and higher and higher. Hopefully with Trump getting in, more regulations being cut, friendlier regulations coming into the space for cryptocurrency, maybe that's enough to get Bitcoin going. But for the foreseeable future, I'm definitely kind of in a dollar cost average mentality along with day trading. Swing trading is just not it. I know we were scaling out of different positions and dollar cost averaging in, but those dollar cost averages are probably the most I'm going to do as far as anything long term right now. Before we go over here to the daily chart for Bitcoin, let me show you guys this. You guys know I bought some tokens the other day, and you guys know I scaled out a lot of my other positions, but I opened up some fresh ones, and these have like 10x leverage, 5x leverage. But you can see this one right here is already down about 300%, about $50. Again, $50, it's not going to hurt me all too much. There's a reason why dollar cost averaged into it and not did one large buy-in, because again, the Fed was going to shake us either way. Reef 300% down, Fetch 300% down. Again, it's $30, but it still matters. 141% down, or it's about $7. NMR is at about 172%, or about $8. Again, small positions for the first buy-in here. And then of course our last two, XRP and World Token. These have been longs for quite a bit of time now, and we're still up a little bit here, but we've already locked in the majority of the profit for these. But just to kind of show you, Bitcoin really hasn't had a terrible month, I would say. Altcoins have had a terrible month. That's the big thing I would stress to you guys right now. Now, as we focus on the daily chart here, this is actually something pretty interesting because the MACD is back down to bearish with the stochastic and the RSI all being bearish again. There's no real reason to do any type of swing trades right now. What you guys are looking for are just clean levels of support. The first one was way back down here on the 50-day moving average. We bounced right off of that one. Actually, that one was very, very beautiful. Again, there was a lot of volatility because it was fresh off of that announcement from the Fed about 2 rate cuts in 2025, and of course the rate cut we had this month. But let's move over a little bit here. It looks like we may have a death cross here unless Bitcoin finds a way to go parabolic again. I don't really see that happening at this point, so I am cautious about if Bitcoin is going to actually manage to hold above this $91,000 support level. We may in fact see Bitcoin come back down a little bit further, maybe back into the 80,000s here. I was trying to do some Fibonacci levels a while ago, and basically you go from the low over here to the high we just experienced, and you're just looking for a basic level, nothing too crazy. Right? You can see we kind of bounced off of that one. The next level happens to be down here at $85,606. I wouldn't be surprised if Bitcoin took a wick down there in the future. I'm not placing any limit orders down there just yet. I think what I'm doing is just going to continue to dollar cost average. That still seems to me to be the best way to enter into the market here. And the main reason for that is everything else. Here is a 4-hour chart of Bitcoin. Let's make this auto. Okay. For the most part, since November, we've been going up or sideways. You can think of it. Ethereum, sharp downturn over the last few days. Solana, very sharp downturn. Doge, sharp downturn. Whiff, sharp downturn. Bonk. I don't need to go into all of these, but you can see that altcoins are in a lot more pain. So I think I'd rather spend my time dollar cost averaging back into some of these tokens. And while we do see that a lot of tokens have been having some rough, couple weeks, few weeks, maybe even a month for some of you guys, go over here to coinmarketcap.com last 24 hours. There are still tokens making moves. Hyperliquid's up 14%, Move is up 8%, Pudgy Penguin's up 6%, Theta Network's up 6%, XTX Network's up 5%. There are still things you can be day trading here. And in the last 7 days, remember, there's still a lot of things that are still doing okay here. Like BGB, still doing good, Hyperliquid still doing okay. Movement still doing okay. But the majority of stuff is going to be like these altcoins. Dog with Hat down 30%. Floki down 30%. It's painful to watch, right? Very, very painful to watch. But again, when I look at Bitcoin here and I see what's happening, you can see that slowdown occurring. I don't think it's going to be crazy, but it does remind me of what we saw back over here where we had a major rally, right? This was after the ETF boom. We reached a Fibonacci level, like we reached back over here. We slightly broke above it, like we did over here. And then what you saw happen was Bitcoin cool off a little bit. I don't know if during this cycle we're actually going to have a parabolic move like we did back in 2021. The era of parabolic Bitcoin may be over. We may be in a slow grind consolidation pattern with so much more institutional money coming in. And maybe we are, as like retail investors, competing with those AI trading algorithms. I think AI is okay with just accumulation, and wait for the big pop and sell it all, because what we're seeing right now is the stock market actually doing okay. The dollar index is spiking like crazy. And crypto as a whole kind of coming down quite hard. When I look at this, I'm not like, Bitcoin's in crisis. Not really, but everything else, you can see a little bit of a crisis there right now, can't you? And that's why I showed you guys my positions. Again, they're small dollar cost averages. I was pretty transparent when I made these. Again, my largest loss right now is like $50. I can live with that because I'm going to dollar cost average even more into this later on this week, and probably I think tomorrow Sunday. Yeah, so I'll be doing it tomorrow Sunday here. One last thing here that I think you guys should understand. We really haven't had many times in American history, since the .com era, when we had computers and technology, lots of electricity kind of flowing everywhere, a lot of tech basically, where we've had the Fed have to pause rates. I'm looking back in time over here, 1990, back over to where we are right now. We had maybe a slight pause in 1990 for maybe like 2 months. The rest of the time we were falling. A slight pause over here from 1995 over here, right? Then we actually rose. That's about the closest I think we have. We have a little bit right here in 2002, but that was already towards the bottom here, so it didn't really matter all too much. So we really don't have much to go off of. And when we do go off of it, it's back in 1995 where, again, the tech was just not where it is right now. And there's just so many other parts of this economy at this point that I don't know if the Fed slowing things down is going to have the intended consequences they're looking for here, which is lower inflation and a softer job market. I think the softer job market may actually come to pass just because the inertia is already leading to that. But I don't think it's going to help out inflation as much as he thinks, and that's my concern right now, especially as Trump comes into office with all of his new policies and his mandate. I am pretty concerned about what this means for the overall Bitcoin bull run and such. For me right now, because I do think he is going to have to cut rates eventually, and I think he's going to cut those rates before we go into recession. I think Bitcoin can still have some good moves. But for me right now, dollar cost averaging seems to be the best bet. And if you guys are looking for 4-hour trades, basically we look at the 4-hour momentum, you see like, hey, here's a bearish move on the 4-hour. right? I'm going to start looking at the 15-minute chart now. And if I see a change of character, right, which happened right here, I'm going to try to trade that down. Break a structure right there, you can trade that down. Break a structure right here, you can always trade those down, but usually you want the solid lines. And those have been working out okay. That's the best way I'm looking at it at this point in time. But again, you have the dailies that are negative. You have the 4 hours, which are negative. 4 hours are positive again. But the weekly is positive. So it's much more shaky, much more volatile, not ideal conditions to be day trading. However, if you guys are patient, you guys should see some good stuff happening soon, especially as it appears that the 50 and 20 moving averages on that 4-hour chart are going to come back down on the below the 200. So it's going to get pretty volatile here, even more volatile. And we just kind of have to accept that. Thanks.